Hey guys, how's everybody doing? Colin Plume, CEO, founder of Double Gold Investments, also founder of My Digital Money, and I have my partner here, Guy Gottslack, founder also of My Digital Money, and we have some cool things to talk about today. Ray Dalio and Tudor Jones have made some, I would say, somewhat bold predictions about things that are happening out there in the economy. So we're going to dive into that. And I think I've been telling people a lot this year. I think this is a year of we're really changing how we're looking at assets more than we've done in the past. And what I mean by that is, gold has been the insurance play. It's always been the safety play. You got to have it. 3%, 2% in your portfolio. All these numbers have been thrown around since I've been doing this. We're doing 16 years. In precious metals, sold and sell these things for 16 years. Good catch this thing. Really heavy. It's a kilo of gold.
I'll take that.
Okay. All right. So yeah, this guy runs off the live stream here. So it was a safety play. It was insurance. Now it's changing. Tudor Jones, Ray Dalio make an argument that it's a different asset today than it was when I started. And obviously, you're watching the crypto market. We're going to dive into that a little bit. And I guess before we get into some of these videos, what have you been seeing? Just quick update on the crypto market. Anything interesting this year that you want to
a lot interesting. There's a lot of regulatory developments. The Genius Act passed a few weeks ago, which is a stablecoin regulation. And, the Trump administration is very pro-crypto. They're about to release a crypto report the 30th of this month, or the 31st. And also, new executive orders coming out about retirement plans for 401ks that will allow crypto in that, and we're going to talk about that.
Even though I will say the stablecoin bill, the Genius Act, I will argue it's only been enacted because they want buyers of U.S. Treasury. That's it. That's my argument, is that the 1-to-1 ratio is just to get more U.S. Treasury buyers, which is a good thing. I think it's important, and it's another way for them to keep an eye on it. No, right?
Some would say, but yeah, it's really good for the dollar, I think, still. Pros and cons, but it decreases the reach of the dollar, and that's one thing people are always scared about with Bitcoin. Like, is it going to replace the dollar? So this kind of helps mitigate that. So you can have both Bitcoin and the dollar.
You think stablecoin helps the dollar?
I think so, yeah, because it
has to be backed by
it's backed by
the dollar or a treasury. So you're saying in that they have to hold it, and makes it it's sort of like buying the dollar, but they make it easier.
Yeah, it reduces the risk of the dollar being dethroned as a world reserve currency.
Mm-hmm.
That makes it more accessible.
Okay, all right. I think that's an interesting. I'm more of a conspiratorial idea that it's just to buy treasury bonds, because I know what's happening in the treasury market, and this is we buyers of treasury bonds as much as possible in this country, because we're living on the debt, right? It's just another thing that we need to have to keep the Ponzi scheme going along. Is we got to have people buying those treasury bonds. So, but yeah, let's dive into what Tudor Jones said.
Where they are right now.
Right.
Are you short the dollar? I mean, you mentioned you're into yields.
I would say that the easiest long-term trades are, the yield curve's going to steepen probably to historic wides. We're going to cut short-term rates dramatically in the next year. And the dollar will probably be lower because of that. A lot lower because of that.
How much lower? We're off 10% from our high right now. 8%.
Yeah, I would say I think that's a year from today. That's probably a realistic assumption.
I want to go to one point that you made in that blueprint that you laid out, and that comes to appointing the most dovish Fed chair possible. Jerome Powell's term ends in May 2026. We've heard from the president recently that he's going to announce some contenders sometime soon. Bloomberg News has reported in the past 24 hours that Scott Bessent has emerged as a pick. Kevin Warsh is under consideration. I mean, if you had your pick, who do you think is best suited for the chair?
Those are two great names. Those are two fabulous names.
As a global leader in alternatives today, PGIM is capturing the potential of tomorrow with over $320 billion in alts across public and private markets. PGIM, the pursuit of outperformance.
1 in 10 babies in the U.S. are born prematurely. Many of these babies need around-the-clock monitoring and busy neonatal ICU.
Again, if I was president, if I just think about President Trump, he's a growth guy, right? He's a loyalty and growth guy. You're going to be my pick if you're loyal to me. You're going to be my pick if you're a growth guy. And I'd pick a growth guy. And probably Scott would be more in line with that than Kevin would. They will have had a really close working relationship at that point. I also think, again, the playbook's pretty clear historically and right now. We are fiscally constrained. We're in a debt trap. You're going to have to run negative real rates to get out of it. That's what we did in the 50s. We had, if you'll remember, we had a variety of prices fixed by the Treasury while we had 5 and 6% inflation for a period of time. We're going to have negative real rates, and that's why you have to think about what is facing our policymakers in this debt trap as you construct your portfolio. So what would an ideal portfolio be in something like that? Well, what has worked so far? What has worked so far has been some combination of stocks, which won't do great, which would do terribly if we ever actually had, if they called us out and the bond market actually gave us an accident that then spilled over. But it would be some combination of probably gold, vol adjusted, Bitcoin, gold, stocks. That's probably your best portfolio to fight inflation.
It's interesting. Negative real rates would be like early 2000s. We'd be in the early 2000s scenario too, where we had negative real rates. But yeah, I mean, and this is what I'm talking about. This is the announcers on this major publication 15 years ago would have been like, gold, Bitcoin. They would have been laughing.
Well, 2 years ago, they would have been like, what? Bitcoin?
Bitcoin, yeah.
I mean,
4 years ago,
here.
when we started My Digital Money, they would have been like, Bitcoin. Right? I mean, true. I mean, they
it's
were
turned around in the last 2 years. Completely.
Yeah, I mean, I think, well, even 2 years ago, Bitcoin was at what, 65. So I mean, it had moved from that, it dropped down to 15,000. So it had already, picked back.
Yeah, but over the last 2 years, it's just become much more legitimized because institutions have adopted it and the government is adopting it, and so now it's much more in the mainstream because of that. Because institutions basically endorse it.
Right. But since I've been doing this for 16 years, you would never, that Paul Tudor Jones would never have been able to say that. And then say like, yeah, that makes sense. Like the mainstream has finally come around to Bitcoin and to gold, and realize that it's important. And his recipe to get us out of the mess that he said we were in, is to get rates really down. Not like, 100 basis points. Like he wants to go way down, and have inflation hit 5-6%, which, by the way, in Paul Tudor Jones' scenario, inflation at 5-6%, that means you're going to see Bitcoin at, 200,000-300,000. You're going to see gold at $6,000-7,000, I would argue. Silver at $150, $200 if you have 5-6% inflation. And that would be a lot of money printed in the last 10 years. And if Scott Bessel gets in, he could go to So I think it's very interesting, this scenario. Is there more for Paul Tudor Jones, or we're on to the next?
Ray Dalio?
Ray Dalio. Okay, I'm still going to go down to see what he says.
By many as an alternative money. My own approach is in my share of my portfolio, I have gold and I have some Bitcoin, but not much.
What are they each? 10% gold?
I'm not going to describe my own exactly, but I'll say the following. If you were neutral on everything, in other words, you didn't have a point of view, and you were optimizing your portfolio for the best return to risk ratio you would have about 15% of your money in gold or Bitcoin. I mean, I'm strongly preferring gold to Bitcoin, but that's up to you. Again, I want to say, what is the issue here? The issue is the devaluation of money.
Mm-hmm.
Okay, so the devaluation of money, and if you have that issue, and times when it occurred, which was in times of excess debt and geopolitical problems. Just go back and study history, study the British pound, study the Dutch guilder, study this. You would find that in all such periods, also like the 70s, it's an effective diversifier. So if you had no view, you would have about 15% in that portfolio as a hedge against the other. I hope that that's somewhat of a guide.
No, it's fascinating. I mean, I doubt most people's in normal times allocations to gold is 15%. And I guess this isn't another question, but the conclusion for most people is once they finish reading your book, Ray, is they'll go overweight that 15%.
I don't want them to do that. You know, that's a bet. I want them to diversify well. Okay. Mm-hmm. I don't want them to start playing the markets. And I would say do half of whatever you're thinking is right, or, so that you are at least doing something,
mm-hmm.
right?
Mm-hmm.
And that way, if you do half, you'll be kicking yourself if it goes up, and you'll be kicking yourself if it goes down.
I mentioned this earlier, and you didn't think in the debt crisis scenario that it was priced in. But one of the key points across your books you've always made is that consensus is already in the price. And as we consider the big theme of AI, I just wondered your view, Ray. I mean, I don't think anyone doubts that AI is a game changer for
Yeah, so 15% by Ray Dalio. I will say that's something really interesting about the way he phrased that. Is the way that he phrased it is exactly what I was on the phone when I sell gold to people. I would always say do half of what you think is right. Because I always wanted people to err on the side of caution, doing what they felt comfortable with.
You're kicking yourself either way. About 1,000% of what you said.
You're kicking yourself either way. Yeah, I know. And then he said, but I also think that, you can always add more over time, which I've always done in asset classes that I've always tiptoed into everything. And then if I saw that it was going well or that I liked it, that's what I did in crypto too. We tiptoed in, and now we're obviously much more bullish. Obviously, he's not a believer, as much of a believer in Bitcoin. He does say you should have some of it. I'm sure you get this question a lot, Brad. Like, what do you think? I mean, for people, you know, it's changing. When I started in gold 16 years ago, I said 2 to 3%. Now 15% in gold is what Ray Dalio's recommending. Obviously, he owns much more because he doesn't want to tell you what he owns, which I respect. um, you know, what do you think about you? Do you look at it like how much to have in your IRA? I know they're talking about adding it to 401ks. Do you separate those two things, or is it just like the whole pie? Like, should you have some for in a cash account? Should you have some in 401k? Like, what are your
Yeah.
thoughts on it?
And it's very personal thing. I mean, it depends on your risk tolerance and your goals and all that. But I'm more bullish naturally on Bitcoin. I would tell people to do your own research and make your own opinion up on what you think is going to be the market for Bitcoin and other cryptocurrencies in the future. Definitely understand them before you make that determination. But I hear even the major big players, the BlackRocks and other big institutions recommend. I've heard 1 to 2% of Bitcoin, and I've heard 5 to 10%. It just depends on how much you want to grow. Obviously, gold and precious metals is more stable and more defensive. But you should have, if you have a larger growth target, you would naturally put more allocation towards Bitcoin because you want a higher growth. Right? And it just depends on also your horizon. So obviously, the more you're willing to wait, the more you can put into Bitcoin, and that's where IRAs are great. Like I think if you're waiting 15, 20 years, doesn't matter as much the price you get in at, and the volatility is not as bad. But if you believe that it's an asset that's going to stay there.
Yeah, well, first I would say, we have a way to do it in your IRA. I think any way you look at it, that's the mistake. There's no doubt that, and the way we do it, that you own the asset by yourself instead of a fund. Just like in the same thing with gold, that you're not buying a share. It's less expensive. President Trump's talking about putting in 401ks. The problem is that you're going to pay the 401k, the administrative fee, and then you're going to pay the fee to the fund. So you're not going to get the most.
Yeah.
And you really don't own it.
Right, and with an IRA, it's self-directed. So with us, we actually own it. So you keep it, we don't rent it out, and it's a cool storage as well. There's a lot of benefits doing it with us, but of course, the IRA allows you to not pay taxes on capital gains, and not pay capital gains taxes, and so you can sell it out of a bull market, and then you can buy back in when the price is low, and continue to do that.
Especially like think about Roth. You put it in the Roth, and then it's yours, right? And it's yours. You don't pay tax. So when you take it out, it's yours. I mean, that's the beauty behind the Roth. I actually spoke to an interesting. I talked to a financial advisor who's very heavy in stocks. But what his strategy is that he picks 45 to 50 stocks for a client, and he recommends 1 to 2% in each stock. And the way he looks at it is that he looks at stocks that are going to have a 14% return over 10 years. And if he thinks, it doesn't matter where the market is, if he thinks he can buy it and they can have a 14% return over 10 years, he thinks it's a good stock. They're usually like, Hewlett Packard and, companies, not IPOs. And then he was telling me that he's thinking that Bitcoin will be, if you can rationalize that it can have the same return, he would throw that in there too. Which I think is a really interesting strategy of that 1 to 2% that everybody's sort of talking about. Now Bitcoin's way outperformed that, of course, 14%. Yeah. I think it's averaged, I don't even know what percentage, 40, 50% in the last, few years, and significantly more. But that's the way. This is a very successful. This is a financial advisor that's been averaging 12, 13% returns and been killing the market for the past 15 years. So he's thinking about adding, Bitcoin in there. Do you think that the government allowing crypto into 401ks is that actually new? Is that a new idea that President Trump?
It's not fully new. I mean, you have companies like Fidelity that offer it, but it's not really direct exposure. It's indirect exposure, ETFs and whatnot. And so, that concept has been introduced in the past, 1 to 2 years. But this would kind of like reverse the guidance of, the Labor Department saying it's risky, which already officially was reversed in May. But this is kind of a broader directive. Like he's talking about doing an executive order, which basically like relaxes the regulations and enables 401k providers to, offer it on a broader scale. So this would open up a $9 trillion market.
401k providers are going to worry about getting sued, right? They don't want to. So President Trump does the executive order, they put it in there, and then Bitcoin goes down to 20,000. They're just worried about getting into trouble.
Yeah.
I mean, that's the majority of the reason they haven't put it in there.
Yeah, but like I said, if you're doing a long horizon, right, which is what retirement accounts are usually, right? If you're still working, you're going to wait a while.
Yeah.
Even if it goes down to 20, I'm pretty certain it's going to go back up, and get to 1 million at some point. So the reason why I think it's a good thing is because it opens up a $9 trillion market, right, to Bitcoin. So that means the price goes up.
Sure. Yeah, as a whole other element. They're also President Trump's going to talk about allowing private equity investments into 401ks and IRAs, which have typically been restricted to accredited investors, right? Mm-hmm. So it's this idea of like giving more options to,
and like Paul Tudor Jones was saying, Trump is a growth guy,
mm-hmm.
And so that's I think why he's a proponent of these assets, right? Because of higher growth.
Yeah.
So when you retire, you want to, especially with the dollar, the way it's being devalued, you need to keep up with inflation, and so you need higher growth assets. It's not going to cut it to, have the same growth rate we've had in 401ks.
Yeah, absolutely. Yeah, here's Trump eyes moving U.S. economy further into crypto via mortgages. I don't understand via mortgages.
Yeah, so it's just basically saying that when you apply for a loan, the underwriting process,
you apply for
for a mortgage, you would, in the underwriting process, you would recognize crypto as an asset. And so you would make it easier to get a loan.
But they don't. You're saying that they
Yeah, right now they don't consider it an asset. It would be like your properties, the cash that you have.
Stocks.
So, so that would determine, how much of a loan you qualify for and what rate. But now you can, if you have crypto, you can use that to help your overall, how much loan you can get, the rate that you get.
Yeah, that makes sense to me. President Trump is trying to do everything to get real estate going, right? I mean, he wants to lower rates. He's got the stable coin, which hopefully adds a whole new market of buyers for treasury bonds. This would give more net worth to people that are looking to get a mortgage. So it just creates a whole new group of buyers and liquidity.
Yeah, and I think it's a great thing, but as long as you do it right. I know there's Elizabeth Warren and others that are, say it's risky to do that in the mortgage industry, right? But as long as you don't assign the exact value, like if I have $1 million in Bitcoin, okay, so maybe you don't assign $1 million to it. Maybe you adjust for the risk, right, for volatility. So I think as long as
I think they do that with
yeah, so as long as you consider the volatile nature, I think it's fine.
Yeah. So if you have $1 million, you're saying like the bank would say maybe you take a 20% haircut or 30%. So you got 700,000. They count that as the value.
Yeah. Yeah. You would probably have a whole calculation, right? That goes into okay, what happens if the market drops like it did in the last cycle, right? Like 60%, 70%. So you account, for a crash. As long as you account for a crash and you don't look at it, with your rose-colored glasses, I think it's
a lot of people aren't aware that on my digital money you can buy silver. Silver's option. The reason that we wanted to offer gold, silver, platinum, and cryptos is because people want to go. A lot of people want to go between and have diversification that can do that.
Yeah, and the distinction is that it's fractional, right? So that means that we purchase a kilo bar and then you can buy a share of it. You don't have to buy a whole physical asset. you can buy any share. So that means that, the settlement is faster and it also means it's flexible, like the amount that you have.
Right.
Right. But, some people I understand would want the physical. It's kind of nice to hold this thing.
Yeah.
So that's where, you would go with the gold.
Yeah. And also, comparatively to ETF and silver that's stored in some vault, and this is all held within our exchange. We verify everything. I'm in the gold business for 16 years, so I wanted to make sure that it's a safe environment for investors. But it's nice that you can get in and out because we do have clients that are trading on shares. Mm-hmm. And the nice thing is, let's say Bitcoin hits a number you like, and then you want to get into silver, and then silver hits a number you like, you can move in and out of it. And if it's an IRA, it's all tax deferred. So you could have some massive. So forget that silver's up over 20% this year. Forget Bitcoin's up a good amount. Also, if you think about the swings, if you take advantage of the swings, you could be up substantially this year, and all of that could be tax deferred.
That's huge. I mean, having them in the same IRA portfolio is a real big advantage. Because every time I do any transaction, I'm always like, oh, this is a taxable event? Okay, let me do it twice. But here, you're kind of free to go in and out and not have to then fill out a bunch of paperwork at the end of the year.
And think about people that didn't have liquidity because they never sold too, right? Like, if you really read the markets and you think, okay, let's just say next year Bitcoin's going to have a big pullback, and you sell, you wait in cash, and then it drops. Let's say it drops down to 60,000 hypothetically, and you can jump back in and then ride it back up again. You'll make way more money than if you just sat in your asset. Right? Yeah. So I hate to be a hater on the hodlers, but I do think there is some money that we want to be able to be looking at and take advantage. Because a lot of times, you can see things happen. We know they're going to drop rates in September. We know that they're in May next year, they're going to put something more aggressive. What is that going to do? How is that going to affect gold? How is that going to affect crypto? You take advantage of that. So that's a nice thing with MBM that we can do. Let's cut to something real quick.
We're talking to people today about investments. Let's see if we can get somebody. Excuse me, sir. Do you have a retirement account?
I do. I'm invested in some annuities.
Fixed income? How is that?
It was better a few years ago. Each year, it buys less and less, barely keeping up.
That's where gold can make a difference. Unlike fixed payouts, gold rises with inflation, so you're not stuck with a low fixed payment.
So gold isn't stuck in the past like my annuity?
Don't let inflation erode your retirement savings. Invest in gold. Invest with Noble Gold Investment.
So, Guy, anything you want to wrap up with here about the markets? Anything on the regulatory? What do you want to?
Yeah, I think the next thing to look for is the crypto report. That's, there was an executive order in January saying you have 180 days to come with this report. So that's going to come out, and that's going to have a lot of stuff that you should look out for, like about the crypto strategic reserve, right? So guidance for how much Bitcoin to buy. It's going to have probably stuff about the retirement, crypto retirement, and about banning CBDCs. And there's the market structure bill that's probably going to be passed, in my opinion, in a few months. So these are big developments. So that's about giving clarity about what's a security, what's not a security in the crypto world, and that would, really bring companies back into, being comfortable to innovate, right? The stablecoin was the first, the Genius Act stablecoin bill was like the first step, but the market structure bill is really giving the broader guidance on, non-stablecoin cryptocurrencies. And
what do you mean by innovate? Like allowing them to do more R&D or
meaning just to create a company or to release more products in the crypto space, because without fearing being sued by the SEC, right? Because now you have guidance that tells you you're allowed to do it, not allowed to do it. You don't have to wonder, am I doing the right thing, or am I going to be sued tomorrow by the SEC? So that's going to really help with innovation and just provide clarity overall. And so these are things to look out for. If you're invested in crypto, then you can make decisions about buying and selling. And, I think this report is going to be interesting to watch out for.
Yeah. Also, I really do think we should get you in front of the developer.
I would love to meet him.
I think he's missing the boat. Right? He's got a best-selling book, and I know he's a billionaire, but I mean, I think he needs someone to open his eyes on Bitcoin. And listen, I agree with him on here.
I mean, at least he's willing to, invest in it.
Yeah.
Right? I feel like 5 years ago, he probably would have said, like, oh, what are you talking about? No way. But now he's starting to, open up to it, just like everyone. Like Jamie Dimon from JP Morgan, completely did a 180. And I believe Ray Dalio, like in 3-4 years, he's going to be like, should do 15% in Bitcoin.
Hopefully he hasn't missed too much of a ride before that happens. All right, great. Well, hopefully everybody thought this was interesting. It's always great to have Guy on. He's very busy, but anyone that wants to learn more about My Digital Money, you can check out the website, mydigitalmoney.com, or if you want to talk to me at Global Gold. I think gold and Bitcoin are really have a lot of synergy now, so you call either company to get questions answered. But yeah, hopefully you thought it was interesting. We went into a lot today, and we'll see you next week. Obviously, send us questions that you have, anything happening in the markets that you're interested in, and